Okay, so we're just about 2 minutes after 10. Welcome to everybody who's joining us. The session normally starts at 10 a.m., but we were just trying to sort out a bit of a technicality there. It's called Opinions, and it's exactly that. We need to have your opinions. We need to hear your opinions. The idea was this. Look, there's a lot happening in the world. There are various types of subject matter that each of us, is a subject matter expert and it's of value for us to meet and just chat about these things and hear some people who've actually invested time in thinking about these things. And also, we get to share our own 2 cents worth, throw it into the equation. And considering that we are, going through this COVID-19 challenge, and we are dealing with the implications and impact thereof, we can't have a conversation that does not speak to the impact of COVID-19 on money. I think that's a universal thing. We're all experiencing it. We're all feeling it. And so I reached out to a friend of mine, and I said, yo, let's go and have this conversation. People want to know what to do with their money. And I'll give you her background. I think a lot of people already know who she is. But yeah, that's the conversation I want us to have today. We're on until 11 o'clock, so please send the questions through. I'll try and get through them through as many of them as possible. It's worth putting a disclaimer that obviously we are not a financial service provider, or we're not licensed to provide financial advice. That's the session's called Opinions. It is still in your best interest to go and see your financial advisor if there are things of interest that Thuli brings up, and just to check that it's aligned with whatever your personal financial situation might be. With that being said, good morning, Tools.
Morning, Katleha. How are you doing?
I'm phenomenal. How are you?
I'm super.
Okay, so quick background for anybody who doesn't know you. I try to pick out a couple of things from your resume because it's I need to work harder in life.
That's why I said, hey, just pick whatever you like. Just highlight one or two things.
So Thuli Magubane is a UCT graduate. She holds a PDM from Wits Business School as well. She also completed a master's program in leadership and strategy from the #1 business school in Europe, Instituto de Espressa.
De Empresa.
That's as much as you're going to get in terms of my ability to speak Spanish or anything close to that. She's also worked for the likes of Absa Capital and Investec. She is also the founder of Minfresh Advisory, which focuses on financial advisory and strategy development. I don't know if I should throw this in, but I'll spice it up by just saying that she's an award-winning radio presenter as well, right? It's award-winning, or is it award-nominated?
Nominated.
Nominated is as good as winning, okay? This is when she hosted Me and Me on Kaya FM. I think a lot of people might know her from then, which is when you and I first really interacted and have worked together since, right, Thuli?
Yes, we met at Kaya FM.
Sure. Okay, so before we jump into the big question, which is what to do with our money during COVID-19, which I think speaks to post-COVID-19 as well. How are things on your side? How's business? How are you coping with everything that's going on?
Personally, I'm doing all right. I think I'm in a good space. I'm trying to stay positive and don't let everything that's happening, don't let the negative news get you down, because obviously we've had a lot of negative media, whether it's around COVID or the impact of COVID-19 on the economy, seeing businesses closing or hearing of businesses closing down, people really being stretched. So, I mean, there's a lot of negativity, but I've just tried to keep myself in a really positive space and try to think of life beyond Corona, because there will be life beyond coronavirus. And it's going to be a different world. The world as we know it, as I say, is gone and dead. And the sooner we make peace with that, the better, and start thinking about what is life going to be like post-corona. But I guess whilst you're in it, you've got to find ways of coping and surviving. And I've managed to do that, yeah. Okay,
well, without sort of getting into too much detail, are there particular strategies that you're using? Is there a ritual that you do in the morning? Do you meditate now? What do you do? What works for you?
For me, I think one of the things that has helped me to keep positive is prayer. Just spending time praying, reading the Bible. And lucky enough at our church, at least in April, there was almost like at lunchtime, there was like a half an hour daily prayer. So you could, like how we all tuned in, everybody tunes in, and we pray together, and that has helped me, and also just listening to YouTube videos, kind of positive motivational YouTube videos, just to keep up in a positive state of mind. That has helped me as well. So
I guess it's also it helps when you
a bit of exercise. Funny enough, I signed, I don't know if people have seen this coming up on their timelines, but figure eight. Figure eight is this kind of dance workout video thing. So you subscribe and then you have a whole lot of videos. It's basically based on Latin American dance, but it's an exercise video. So that has helped. It's also fun.
Okay, well, there you go. Some nice little things that maybe you can incorporate into whatever you're doing at home. Okay, let's get to the reason we're all here. It's 10:09. Welcome if you're just joining us on the stream. We're talking money today, specifically personal finance. The session is called Opinions. So please share yours, and of course, ask any questions that you might have, and I'll try and get through them as much as possible. So Thuli, there it is. The big question is, what should people be doing with their money during this COVID-19 pandemic that's happening?
Well, Katlego, I mean, people are at different phases and stages in their life. There's some people who do have money, and there are those who don't have money. There's some who are trying to get money, and others are wondering if they'll ever get money. So maybe we'll address the different groups.
Okay.
We can start off, I mean, there are a lot of people who are freelancers, and I guess if you're a freelancer or you're a business person that really relied on you working, if you don't work, then you don't get paid. Then obviously this has been a very very gloomy time for a lot of people. So for me, my advice is, if your income has been impacted and you can't earn, think outside of the box. Don't try and focus on what you've been doing. Try and find other things that you could do in the interim to earn some money. It could be maybe finding the talent you have. If you can cook or you can bake, perhaps start a side hustle. You know, a lot of people, I'm sure you've seen in timelines, everyone is becoming a baker. You know, trying to bake or fry amaguinya, or bake banana loaf or biscuits or whatever it may be. So if you've got a talent, maybe look at something like that. Maybe cooking or baking, and then start selling that service so that you can deliver. At least these days, it's easy to have a delivery service. So you can, you know, make your goods, post them on various social media platforms, get people to order. So start making money that way. A friend of mine, actually in the catering business, he started making home cooked meals for people, because during the lockdown you get tired of cooking. We've been cooking a lot, washing dishes, so it is a bit of a breather that's needed to get someone who's going to cook for you. Yeah. So that could be one. And then on the internet, there are lots of ideas in terms of side hustles. You can look at doing surveys, and some of these surveys are US based, so you get paid in dollars. It may not be a lot, getting paid maybe $50 for a survey, but hey, in rands, it converts into a bit of money. And also, you could also just look at giving advice to people, like perhaps myself, if you know a little bit about a certain subject that people really need advice, maybe start offering online advisory sessions, and people can prepay for that session and you could give them advice. And I like the platform that you've started in terms of just the gig economy, trying to go out there and find various platforms that are offering part-time jobs for freelancers. So try and look at ways that you could earn outside of your usual income. So that would be the first. And then you have people who do have savings and probably are worried if their savings are going to last them enough, because we don't even know when this whole coronavirus thing is going to be over. Yes, we're in level 4 right now, but we don't know how long it's going to take for us to get to level 3, even 2. when more economic activity is going to take place. So it's really about stretching your rent, stretching the money that you have. So it might mean downgrading. It's one word that a lot of us
I'm going to put
that's
a whole other conversation to have, okay?
Yeah,
because I think a lot of
your lifestyle.
Yeah, I think a lot of people have that conversation. It's a difficult one, but they need to definitely have the downgrading conversation. But anyway, not to interrupt you, I'm going to note that we should come back to that and maybe just some ideas on what it is that people should be cutting down on. But we'll come back to that.
Okay, so for me, I mean, there's certain things that are nice to have, and I suppose during the lockdown, when you're spending more time at home, things like DSTV and Netflix are what have been keeping you company. But if the rand is really tight, maybe you might have to sacrifice some of those subscriptions.
Yeah.
And it may not only just be just TV, but gym. If you're not going to the gym, why do you continue paying every month for that gym subscription? Perhaps cancel your gym if obviously your contract allows you to do that. If there's other things that you're paying for at the moment that you're not using, rather look at cutting them at the moment so you can actually save on that money. And also in terms of just buying groceries, rather try and buy in bulk and go to the macros and buy in bulk so that you can save. If you're staying alone or you're one or two people, maybe club up with a couple of friends. Let's all go to macro and buy groceries in bulk.
Sorry? Not at the same time. They must send somebody to go and buy on their behalf. Social distancing too. Social distancing.
Yes. Obviously not all go down at the same time, but if you put money together, one person can go and then buy a lot of things that you can share, and you can definitely be able to save money that way. And we are not traveling, so the money that you're saving from either your transport costs or your petrol, look at other ways that you can use that more effectively, because I think everybody has saved money on that. But obviously we're cooking a lot more, so it is going towards money. And instead of buying fresh produce from the supermarket, try and go to more places like food lovers market, so more market kind of environment where they are selling fresh produce at a cheaper price. You can actually definitely look at doing that. And then find books to read. That's another way of entertaining yourself. So instead of spending a lot of data being on social media, this is good. You can tune in. So you can use your data effectively, but don't spend hours and hours on social media or basically streaming movies and that. Save your data and try and find ways to entertain yourself while you are actually under lockdown. And then also stretching your money. Just try and see in your budget as well. What are some of the other things that you can cut out because you are at home? Sometimes people can be buying clothes, and we are moving towards winter. The question is, do you really need a new winter wardrobe? Is last year's one not sufficient? So I guess it's just having those difficult conversations, looking at our budget. If you don't have a budget, then maybe it's time to actually start drafting start drafting a budget so that you know what you are working with. And another thing related to savings, if you do have money that's put away in savings, is that interest rates have come down. And so the amount of money that you're earning from your savings has definitely come down, which is not great. And so try and look around. If it's possible, look around what different banks are offering in terms of their interest rates, because obviously everybody's interest rate has come down, but there might be one or two people that are still offering a good interest rate. I don't know if I should mention the bank. Would it be free advertising?
No, go ahead. I'm trying to help people here. That's what it is.
I know African Bank is actually offering a very good interest rate on their savings accounts. I mean, before we had the Reserve Bank cutting down interest rates. At some point, one of their accounts was offering about 13.3% on money saved, which is quite high. So it's really about looking around and trying to find a place where you can earn more interest.
You know, in hearing you say that, I think a lot of this ties back to psychology in many ways. So, for example, when you speak about downgrading lifestyle, again, it goes back to psychology. When you're mentioning a bank like African Bank, I know that there are a lot of middle class, and I'll specifically speak for black people.
I know, there's the connotation. You don't want to be associated with African Bank.
Which is weird, because, I mean, you're buying the service, not the brand, but I guess the brand counts in a lot of ways. People don't want to have a card that comes out of their wallet be an African Bank one or a Capitec one, yet they seem to be offering competitive rates in terms of, return. Yes. I don't understand.
I know, because obviously African Bank was known as targeting the lower LSMs, and it was mainly offering debt instead of transactional services. But obviously, we know what happened to African Bank. It kind of collapsed, had to be rescued. And part of the rescue was trying to relook at their operating model, and which meant that they can't be just on lending. They also need to look at having transactional banking, where they can also start earning money, and also in offering these investment accounts, because obviously they were mainly just a creditor. So now the investment accounts is trying to attract people to invest money.
People who actually
with them,
make that money work.
Yes. Yeah.
Okay. So I was going to reserve the questions for a little later, but we had some questions that came in ahead of the segment, and Shannon sent a question saying, would it be a good time to cancel or cash in on investments to make sure that you've got some extra cash on hand? And I just thought, because we're speaking about it, it might be a good time to answer that one.
Okay. So I guess with that one, you really need to look at how much do you have saved and how much do you need in terms of your monthly expenses and stuff. So for me, if you do need to cash out, if it's possible, maybe cash out a portion of your savings instead of everything. But obviously it depends on how much you've got saved up. If you don't have much and you really need that money, then I guess it's worth cashing out. And also that's part of the reason why interest rates are low at the moment. Government is trying to deter people from saving because you're really not earning a lot of money. The economy is not doing well, so we do need to spend. So that's part of the reason why interest rates are low. But obviously on the other end, if you do have debt, with the lower interest rates, it means that your installments, whether on your bond, on your car, your credit card, whatever you have, those installments have actually come down. So which means it actually allows you to have a little bit of extra cash in your pocket, which is very much needed when things are uncertain. And also, I suppose related to cashing out your investment, it could be wondering whether if you do have shares, should you be selling your shares and getting the cash? And really, it depends. With share investing, it's supposed to be a long game, so you're supposed to ride out the wave of the market. When the market goes down, stay put. It will actually start rising again. But just recently, I was saving or buying shares through my bank, and they were using a fund manager which was not performing. Since we're being honest, I bank with FNB and they have an account called Share Saver, and the Share Saver account, even before the corona thing happened, they were just not performing well. So when I was looking at my portfolio, I was not happy with their performance. So beginning of March, when things were starting to get more uncertain, I decided to cash out, those shares from Share Saver, because their fund manager was not performing, and then just have that money in cash and just put it away in savings. So you could look at that option as well if it is available to you. But also the reverse, if you do want to get into shares it's the best time to get into share investing
Yep.
at the moment, because the market is down. They always say buy low, sell high. So definitely now is the time to be getting into shares if it's something that you've been thinking about doing and you do have some cash basically to get into it.
Fantastic. It's 23 minutes past 10. It's a Thursday morning. Welcome if you're just joining us on the live stream. This is Opinions. And today we're talking about money, specifically personal finance, right? Trying to demystify some of the challenges that we're all facing around COVID-19 at different levels, of course, which I think, I guess, Thuli is highlighting that we're not all at the same place financially. And we can't have sort of a one-size-fits-all approach to how we handle our money. And in fact, maybe that's a good segue for us to go into the second part of the conversation, where you were saying that because we're not all the same, let's first speak about people who don't necessarily have funds and are looking to just shore up, the holes, if you would. But then there's, on the other side, there are people who might have a little bit more disposable money around, and they don't know what to do with it. And, you just came from mentioning that going into share buying right now would be a great option to use your money on. Anything else that you'd advise?
Another thing that I would advise is get into property. Property is a good investment, and if you do have a bit of money that you can put in as your deposit, this is a great time. It's definitely a buyer's market. I'm looking at buying as well, and I've just been surprised as I've been browsing the number of properties that say reduced. The price has been reduced, so people are desperate to sometimes offload some of their properties and are willing to reduce the price. So if you're going to buy property, this is definitely the best time to do it. The prices are going down. And of course, if you're going to take out a bond to buy the property, interest rates are lower. So if you're going to buy property now, my advice is make sure that you fix. Banks don't always offer you the option to fix your interest rate.
Yeah.
So my advice is ask for a fixed interest rate, because the rates are relatively low now, and over time they will increase again. So if you get a lower interest rate, it means over the term of your loan, you will end up paying less in interest than if you're buying when the market has higher interest rates. So definitely property would be another option. I guess offshore things are not looking any better than they are in South Africa. So obviously, depending on your risk appetite, you could I don't know if on the retail, how they're going to do that in terms of retail bonds, because obviously with retail bonds it allows you and I to be able to invest in government bonds. So I'm just not sure now the technicality, because obviously government has been downgraded, and so that means, well, we're downgraded to junk status, as they call it. So which means that the government bonds are not investment grade. So I don't know whether it puts you and I as a retail investor, whether we can still invest in those bonds, whereas there are investors who do look for junk bonds because they have a higher, I was going to say higher yield, but a higher return. So if you are looking at making that risky investment, definitely. And of course, if you do have an appetite for it, there's cryptocurrency. So you could put your money in crypto. For me, I'm still just dabbing my toes in that water, just trying to understand how the crypto world works and how it moves. And surprisingly, Bitcoin is doing well at the moment. I've just been looking at. Yeah, I've been looking at my account because, initially I just put a little bit of money. I didn't want to risk it because I don't understand this. So just a little bit of money, just to understand how it works, so that as I gain more confidence, I'll probably put in more money towards cryptocurrency. So for those who didn't get in when it was lower, probably, I don't know, it may not be the best time to get into it now because it's quite high. Or if you think it's going to get higher, then you can definitely buy some cryptocurrency and just ride out the wave. And I think Obviously, this is the first time we've had a major crisis, economic crisis with cryptocurrency, whereas previously people would put their money in gold when things were uncertain. You knew that gold was a safe haven. You knew if you put your money in gold, you can be able to preserve the value of your money. So I don't know whether cryptocurrency is becoming that safe haven now. It's an alternative place to put your money. So I guess over time we'll know this, that when things become uncertain, put your money in crypto, because
it'll also filter out which cryptos are the ones are stable enough and are dependable enough, because I think that there's a couple of 100,000 of them out there, isn't it?
There are. So for me, I've got in my account, I've got Bitcoin and Ethereum. Ethereum is also not doing badly. It's also doing well, but obviously it's not as expensive as Bitcoin. It's a more affordable cryptocurrency to get into. I think a cryptocurrency, I mean, Bitcoin is currently at 170 something thousand for one Bitcoin, whereas Ethereum is still, I think, at about 3,500
That's
for
a lot
one.
more affordable.
Yes. So, you know, that's a little bit more affordable. So it's also quite a stable currency. So you can put your money. But for me, my advice, if you're going to get into crypto, don't take a huge lump sum and put it there if you don't know how it works. So rather do it like me, starting small. And as you gain the confidence and you understand how long these waves last and ride it out, then you can start putting more money. And I guess as the last thing on crypto, I mean, I definitely believe it's going to take some time, but that's definitely the future of money. Money as we know it will not exist. We will be using some form of digital currency. I know that the Reserve Bank, I don't know if that project is on hold right now, but the Reserve Bank has its own project as well, where they're looking at some kind of digital currency. So,
well, one would argue that money hasn't existed since Nixon did what he did, but I mean, that's a whole other debate for a long time. Okay, so it's 10:30 now. Let's see if we can take some questions. I'll start with a question that came prior the show, which is Roxanne. And she's asking, what are the catches of taking payment holidays, especially around car repayments? So a lot of financial institutions are offering these sort of holidays. Are they a good idea? Should one be doing it?
For me, my advice is take the payment holiday if you really, really have to.
Okay.
You know, and you have no other option. Literally, you have no income coming in, and there's no way that you can meet that financial obligation. So for me, I would say then take it. But as Roxanne asked, what's the catch?
Yeah.
The catch is that they're gonna take that installment plus the interest on that and put it into your capital of your debt. So they normally call it recapitalizing that amount. So which means you're actually going to be paying interest on interest, and it's also going to lengthen the term of your loan. So on average, car finance is 60 months. So you might find that your car finance is extended maybe by another 6 months, so that they can accommodate giving you this payment holiday. So it does actually work out more expensive for you in the long run, because, as I said, you're going to be paying interest on interest. So because each installment already has interest. So when they're going to capitalize that and then add interest on top of that, it just makes it more expensive. So if you're really in a tight corner and you need to take it, then my advice is take it, but just bear in mind that your term is going to be